Okay guys, hi everyone. Today Ruben from the 5ers Trading Room. Thank you for being with me. I was happy to come back yesterday, making the weekly forecast as usual, and today we're gonna make some live trades. I already have some positions. There was 30 minutes before the PPI data release. Then there was, I think it gave me nice opportunity that I will show you in a minute. Just before, guys, let me know that the sound is good, that everything is set up properly on your side, and then we will go directly into MT5 and discuss about the market and the movement that the market are just giving to us right now. So this is live, and we are in the trading room, guys. Sound is good, perfect, guys. Thank you for the feedback, appreciate. As usual, just a small reminder, this is a live trading room, so all the trades and the analysis I will be providing is only for an educational purposes. So of course, trading is like I'm not giving any financial advice, and of course, be sure of the risk management you are taking in your trading. Could be with us at the 5ers, or it could be either in your personal account. That's the first disclaimer. The second thing is, of course, guys, I like to interact with you. So if you have any questions on the chat, if you have a different analysis, or if you want to discuss about a specific asset, let me know. I don't like to talk alone during that session, which is around 1 hour. So guys, let's interact together. Okay, let's dig into MT5. I just want to show some position I found just after the PP high. Okay, so this is the first position I starting to build on the euro dollar. We see just here the daily support that was created during the London session. Just before the news, the market go back here. This is the PPI news that the market react. It give a huge bounce, and I started already to create a sell position. Of course, I moved to the M1 and find where we can, here I see that, okay, might be the first weaknesses. I start buying here. Also, I enforce myself, and then again here. So I think I'm let's say I have the full exposure actually in the euro dollar. Of course, I'm not only looking to what's happening in the H1 and in the M30, but this is something I explained yesterday. That was something I was looking for. The dollar index has give us a dip. Okay, we see that here it's a big movement up, so I'm expecting the euro dollar to come back a bit. We see clearly also in the daily chart that here, and we also identified it yesterday, this is a key zone. This is, of course, here there is like 100 pips variation, but if you're in front of the chart and you can go in lower, then you see the daily, and then you go to the H4, and then you try to find some setup. And here we're already starting like having oversold positioned stochastics providing us a divergence. We are far from the average. Okay, that's also one of my mindset when the market is going so far from the average. I want the price to go back. So that's exactly what I did here. I will probably put the stop loss just above. I don't want to take over risk on that. But here the risk reward is quite high, guys. We will see where the price can go down. Of course, it will be here my first TP. You see, we are identified also yesterday a big price consolidation in the euro dollar. You see, it was like that during at least one day. Nothing happened, and I think it was today morning we break it, the London session, and the market again starting to to consolidate here, make some movement. So the first TP would be around here. I will be happy to take some profit at the average price we had yesterday, and then we're gonna check what's happening. And of course, I want to hold it to the next key zone. I think the next big key zone will be around that area. Okay, so we have also a demand here that the market might bounce. I don't want to be too much greedy, so that may be the end where I will be ending all of my position, you know, around that area. I think the market, if the market go deep here, I would be happy to exit. Okay, so here on the daily chart, we see that the market is a bit overextended, that we are a bit too far from the average. We see here on the daily chart, the average is around here. So we expect at some point the market to go back. We hope that it is not like here a continuation. You know, sometime when the market go deep into one direction, here the market will consolidate. You see actually here that the market is struggling to go below the high point of the London session. If we have like a movement continuation like that, it could be the end also of the trade, taking my stop loss. So yeah, we will check what's happening, guys. I think I'm fine with this position. I'm feeling very confident on that. We will see what's happening. The next position it's on the Dow Jones. Okay, so it's the US 30. This is also something we found yesterday. This is clearly a resistance level. Here it was a supply. The market reacted on middle of August. So this was the end of the summer. It was a big rally summer. If you remember, guys, the market have made 15% up. Around 15% up in the S&P and in the Dow Jones. Here the market react, and again here it's a big bounce. So here we had the I think here it was the inflation release, but before that the market already bounced very high. So I'm expecting here at least a retracement. I'm not telling that the price will go back to the bottom, but you know, continuing with my mindset, I expect the price to go back. Again, yesterday we identified this was a big consolidation zone. The average was around here, so I will see what's happening here. Probably exiting some of my position before the opening. The opening is on 20 minutes, so let's check what the market will give us. And what is good here is that we have multiple signal. Okay, we have the 30-minute that here react first, then second, and then here after the bounce of the PPI. I was quite happy to find, you know, this price for entering the market. I think it's actually the best price to get in. So of course I will put the stop loss just above. I don't want to take over risk. Here the risk reward is quite high, guys. So you know, I'm generally looking for 1 to 3, 1 to 4 some point. So here we have the daily resistance on the M15 chart. But if we go at the daily chart, this is also okay giving us a key zone that the market can, you know, at least go back to this demand, which is the CPI bounce around here. So you know, I will be looking the exit point. I want to check what the market is doing, and then I will try to find and execute some exit trades. How I will exit, but here also is a key zone that I want to exit some position here also as well. So we will see what's happening. The same on the S&P. It's here it's quite holding, so I might be closing this. You know, I don't want to be also overexposed on the market. Here the market already react. Might be taking this short here as a scalp. We have the opening in 20 minutes. We will see if the market break here. If not, I will end this position. We will see if the market break below. And if not, we will be happy to close it in a small profit. Let's check it out. Yeah, okay. Okay, so I just closed the S&P. As you know, guys, I was quite overexposed with the Dow Jones as well. So We hear it's not bad. I think I open at the best spot. And yeah, let's look what's happening on the door. It's quite the same here. I have a few positions. I almost attract the the top of the day, and we will see. This will resume. I believe that here the market will, giving ups and down, not making too much movement. The market will probably wait for the opening in 20 minutes. So yeah, I will be with you with the opening, and we gonna check where the price will drive. And for the euro, quite the same. Might be waiting. So yeah, this was also interesting in gold. In gold, you see it's PPI bounce and get back all the way down. The fact that I didn't open a sell in gold is that generally gold is very volatile, and here on the H1 I found that this trend is very clear. Okay, we see that at some point the market is so we have this zone. We had this zone also that here the market is a bit above. We have this zone. You see, this is a clear uptrend, very clear. And I expect here for me it's not a good price to sell. I will explain why. We are still in an uptrend channel, and we are approximately at the average. Okay, here is the average for me. So for me here it's a 50% chance, 15% probability for the price to get down to this zone, and 50% chance the price to get up. Okay, so this is how I view the market. So here for me, I don't want to gamble. At some point when you trade, you want to maximize your chance. Here for me, it's not maximizing. It will be like, a kind of a gamble, a trade, and I don't want to do that. Even here, the market is on an overextended, movement. If I want to sell this, I will only sell if the market touch the high standard deviation of the Bollinger Bands, for example, which will be in the H4. We are a bit at the top. In the H1 also. In the daily, we are already at the top. But I was more comfortable by selling the euro dollar, because we have very big key zone on the daily chart. On the H4 it was after news, so generally it gives us some liquidity. Same for the Dow Jones. You see, we have resistance here. We have a daily key zone also here. So I found selling Dow Jones and the euro dollar being a better opportunity for me than selling gold. Let's say here it's more risky, okay, and we don't want to risk. Okay, guys, if you have some questions in the chat, let me know. We are on position, so that's fine. I need only to wait. The opening will be in 15 minutes. I will check what's going on, try to manage a bit the stop loss, and try to exit at some point the market if it goes in our way. I will just get rid of all the line for you. It was just for the explanation. Okay, and then we have okay. That's quite nice actually. The market is rejecting the bonds after the PPI, so that's quite nice. We'll see. Hi Matthias, hope you're well. From Uruguay. GBI Zent, analyze dollar CAD and New Zealand yen. Yeah, we can do that. Let's go. Short window. What do you think about dollar and dollar in the long term. So here, Josie, you are talking about, let's say, the dollar currency in general. No matter it is the dollar yen or the euro dollar, but you're talking about the dollar let's say the dollar index. The dollar index is mostly the euro dollar, which is around 50% of the index. So I will bring my analysis in the dollar just after. Yesterday on the weekly forecast, I already bring my explanation. So if you want to check the replay of the session yesterday, you can go on our YouTube channel and check what I explained about the dollar yesterday and what I think in the long term. Let's say not maybe long term. Long term can be 10 years and can be 1 year. It depends what you're looking for. But at least for the year and the 2 years going forward, I explained it yesterday. I will bring again an explanation. But yeah, I think we will understand also in this session what are my view. This is quite clear. Here in the dollar card, this is something I was looking for also before. It didn't work well. Actually, I was looking not here, but around here, sell. The market continued to push. It was high volatile. I took some stop loss here, and then the market go down. This is quite some reaction that I expect to see in the market. Generally the market, when the price go far from the average, you see here that this is the average. I'm using Bollinger Bands to get the volatility at each moment of time and to know where is the average of the price. Okay, here we see that this was the average and the market bounced up to here, which is around 7% bounce. The average takes some time to calculate, but here we were already far from the average. We were also at a 20 standard deviation. We starting to get across in stochastics, and then the market get down. Here we are quite at the average, so I'm not sure if the market can continue to go down, can continue to go up. I prefer to wait, the market to at least get down. I don't know, maybe here we might have, we can have some key zone. You see there is a demand here. It can bring some leg up. But if we see on the lower time frame, yeah, quite interesting. You see on the M30 minutes, we had this daily support that hold. This was yesterday. We see already some bounce. This was the new PPI fake out, and then actually the market is moving. And again here, this can be the retest of this breakout. You see, we were here on the weekly chart on some type of uptrend channel. This was like a resistance, inclined a bit. I don't like to use trend line, but it's always good to understand what the context. And here it might be a retest of that area. So might be okay, but again, I prefer to wait on the dollar card. I will not do something. The dollar yen is quite the same. I will explain why in the dollar yen. We will go just before in the New Zealand yen, just to continue some analysis. Yeah, here on the New Zealand yen again in the daily chart, I don't find any opportunity at the moment. You see the market is on a big consolidation zone. We had here last week an opportunity to go in. Okay, this was here a clear reaction of the supply. Okay, especially at this zone. So this was here, healthy reaction to the price after the market have make a bounce. Actually, we are here close of the average. Okay, the average is here. I don't want to make here any trades. Again, it will be some type of a gamble here if you buy or if you sell in the daily chart. So here for me, I'm going to wait on the daily chart. Of course, if we go into H1 or 30 minutes, we can find some spot to go in. But I always like to look at the bigger time frame. You see the window is bigger, so you can understand the context a bit better. Yeah, I mean that's it here. And of course, in lower time frame, you can always find some spot. Okay, I don't know. I'm just drawing actually, but you can always find some spot in the M15 and the M5 chart. You see here the market consolidate after this dip here. We have stochastics crossing. The market would like probably to go back to the average, which is here. You can always find some, trades on lower time frame. I don't want to talk about it in this type of session because everyone has his own strategy. I have my own, mindset and strategy. So we can go to any pairs, any time frame, and try to find some spot. Here I'm looking at the bigger time frame, at the big opportunity that we have for the week, and actually it was in the euro dollar for me and the US indices. We will see if it's going to our way in the next 10 minutes after the opening. What pairs do you mostly trade? Of course, in that time, I'm looking mainly at the dollar pairs. Okay, so it will be the euro dollar and it will be the pound dollar. Also the dollar yen, which I think I think it was a few weeks ago. The Bank of Japan intervened in the market. It gives some movement. So yeah, mainly dollar pairs for this type of period. Okay, we are in a period where the dollar is very strong. We identify each Monday, we see the dollar index chart going up, and I feel that the market was overextended at some point, and the dollar will lose some value. That's actually what's happening. You see, in the euro dollar, we were here at 0.95, which is the lowest point, 0.95 500, and the market already is 10% from the low. So here there is a reaction. I think it's a LC reaction. If we go to the monthly chart, you see there is at least no reaction. Here we have some buyers in the euro, and again here I believe in this zone that we are in a key zone. So that's why in a daily basis and H4 basis I'm selling this zone, because even on the monthly chart we see this. The 1.04 zone is a zone where sellers can come back to push the price back again. Actually, I don't know if the price will make a new low. I'm not expecting the price to make a new low, but at least on a daily basis, I'm expecting the price to reject, because we pushed already 10% from the low, guys. So I think this is healthy here to have a rejection, and we will see where the price can go. So yeah, I'm trading dollar pairs and I'm trading US indices, which of course there is a lot of volatility and a lot of opportunities every day. Okay, when we're talking about here on the S&P, for example, if I go back to the weekly chart, you see all this uptrend after the COVID. It was very difficult to find any opportunity. You need to be very patient. You need to hold. And we see here clearly that there is higher volatility. Okay, we see that the variation for 1 week is a bit higher. So of course, as day trader and as speculative trader that want to gain, for big movement in the market, of course here it will be better for us. And here it will be a bit difficult to manage. So yeah, US indices and the dollar pairs definitely are my actually my assets to trade. I was trading oil before in options. Actually oil is, let's say, locked in between $80 and $100. There is a lot of talk about okay, it's going to overheat. I'm just going to close the camera for a few time, and then I'm going to put the camera just after. Sorry guys for the small technical issue, but I was talking about oil, that there is actually some policy and actually the market is not making any big movement. So yeah, I'm also looking at gold on a daily basis. Yeah, sorry for the small technical issue. I will put the camera again when it will calm down. What is the name of the broker at the 5ers? Because I tried to link my account to my Forex book. If you want to connect your 5ers account to my Forex book, you should take the EA of my Forex book. and put it in your The5ers account. You cannot find the name of the broker in my Forex book. Okay, so there is a way to do that. My advice is to take the EA of my Forex books and to put it into your account. Thanks for the analysis. You're welcome. You're most than welcome. You can also continue, guys, to ask me some questions. Meanwhile, I'm managing the trades. 5 minutes before the opening. Yeah, that's quite nice. We already got that reaction. I hope this is not only a rejection before the bounce. I think I'm good to go. We're gonna see, if the market can continue on the lower leg here. Hi Ruben, can you comment if trailing stop loss is a good idea? Everything is a good idea as much as you are comfortable with this strategy and with this action. Okay, I'm not using trailing stop loss as an automatic process of my trading, because when you put a trailing stop loss, you know that most of the time the market will retrace to your stop loss and you will exit the market in your trailing stop loss. So here there is nothing to make a trailing stop loss. I think the stop loss can be hard. I don't know what we call that, but here the stop loss is fixed. Okay, I'm not trying to make it closer, because the market can actually here bounce here again and then continue down. Okay, I don't know when the market will make the price move into my direction. So in my mindset, I'm not using any trailing stop loss. Of course, in an automatic process, but I can sometimes use it when we are in a big uptrend, as we see, for example, in gold. We just look at that, for example, in gold, which is a very clear uptrend. So sometimes where you are, when the market is on a big uptrend, you can use some trailing stop loss. Let's say you find a buy here. Okay, I'm just trying I'm trying, let's say, a trade that, let's say I'm buying the market here, I'm buying gold. If I want to lose the trailing stop loss, I will wait the market to all the time touch this bottom line and then put my trailing stop loss. So here it will be my trailing stop loss when the market will bounce after that. And then my stop loss can be just after this area, so it will be here. So of course here, I will use trailing stop loss because this is the right scenario to use it. But sometimes you don't need to use it. So you need to be flexible when to use, a trading stop loss and not using it. It depends. I know a lot of traders that use trading stop loss and are very comfortable by using that. In my opinion, it depends on which scenario you can use it or not. Okay, let me try put the camera again. Okay, no, overheated. So okay, so I'm going to close it. Meanwhile, okay, we have the market opening in 2 minutes. Let me close this and this. And check what's happening. Actually, I think the market going in our way, guys. Okay, S&P, I closed it, so I have only like 2 positions in the Dow Jones and in the Euro Dollar. We see here the Dow Jones making already a reaction. Let's check the opening. If the market going to touch here the blue line, which is I think the average of this huge consolidation zone, I'm going to exit, let's say 25% of my position. I think it will be a good take profit to take here. Maybe the market can bounce again against me. So I think here it's the nice spot to close some of the position. Of course, I'm looking for few days position. But yeah, let's look at what's going on. We have the opening in 1 minute, so I would be very attentive to that. Very cautious. I hope the market will not bounce. But we have here a nice reaction. Do you get stressed when the market is going against you? Definitely not. You should not be stressed when the market goes against you. If you overexpose yourself in the market, you're going to be stressed. But if you use the correct volume and the correct exposure, that you have a risk management, you have a stop loss in your position, there is nothing to stress. Okay, sometimes losing is part of the business, and of course you cannot be 100% right in trading. So no, at some point the market, it can never goes in my way. So, and of course trading is a long-term process. One day you can be profitable, and the second day you can lose everything. So, we need to be, let's say, patient, and if the market goes against, that's fine. There is another day, another chance, as long as you hold a strong risk management. Do you ever use pivot point? I'm not using pivot point on an automatic process. Again, I'm using Bollinger Bands for most of my decision. Stochastics also, supply, demand. I might be looking at the pivot point without knowing that it's a pivot. That this is a pivot point. So again, but I'm not looking at the pivot point. Okay, here at the opening, we are pushing a bit against me. I hope that we're gonna have a reaction. What's happening in the euro dollar is quite the same. Here it's not so strong, so that's fine. Okay, Jose is telling us that yeah, okay, you just retract the message, but you're just telling that I see your message, that actually USD dollar is pushing against us. You see, it's only 1 minute chart, so I don't know. We need to wait. We are taking a position in the daily chart, in the H4 chart. If we look at the M1 few pips movement, this can bring some confusion. But I know what you mean here. It might be the continuation. Definitely, that's something that can happen, and I already explained that. That here it is only the reaction from the PPI. Actually, the market is opening in US, and we can have here the continuation of the trend. If this happens, that's fine. I have my stop loss just set above. I just need to be in front of the screen and just wait. Okay, let's check if the camera I just called down. We will see if that's wrong right now again. Not yet. Okay, I'm here. No, overrated. Never mind. I think I will finish probably the trading room without the camera. That's fine. I think the main important thing here is to look at the chart and at the trades. So everything is fine. Okay, here the Dow Jones pushed against me a bit. We are just go back in my entry point. On the S&P, we also pushed here, but not enough. So we have to wait, guys. We have to wait, check, and hope the market will not make an overreaction. I will just try to set up my stop loss a bit above. The market here can definitely take my stop loss and then going into my direction. But yeah, let's see what's happening. I heard that one can now trade metals and currencies in one account. during the evaluation. It is true. Yeah, definitely. You can trade metal and currencies in your trading account with us at the same time. So yeah, you can have like a gold position and a Forex position. That's definitely fine. Is this a real account or demo account? This is my live account at The5ers. But this is not under any programs, okay? So I have an account. I can manage some trades, and that's it. Thanks to your time for trading us. Please, I do not well understand why you are shorting the euro dollar. I will just go back to the chart of the euro dollar and explain why I'm shorting this today. And thank you, thank you for the feedback. I appreciate. I hope you enjoy the session. Just short explanation again. I just would get rid of all the line here. It may be confusing at some point. Okay, here for me is a key zone in the euro dollar, so that's why I'm selling it. Okay, I see that PPI, after the PPI news we had, the market starting to retrace. I'm starting selling the price here. We are probably in the daily chart in an overextended movement, so that's why I'm selling. Of course, I'm not expecting the price to go back and make a new low, but at least, you know, some reaction to the average, okay, might be here and then continuing. So I should be careful at when to exit the market. Okay, here I think the biggest challenge for me in this trade will be to know exactly where to exit the trade. Okay, but that's what I'm looking for. Okay, here I expect the market to retrace to the average point. Here I will exit most of all my position here, but of course I want to exit some probably here, which is a big zone also for me. If the market go back to that zone, I will exit some of my position. If the market continue on my side, I will exit all of my position here. So this is my hand of the trade and my TP. So that's why I'm shorting the euro dollar. I know that the dollar index have have a big dip last week. Again, I'm expecting a retracement. It's a LC retracement. I'm still expecting the euro dollar to go higher in the monthly chart. Okay, I don't know when, but it might happen. Okay, monthly chart, it takes some time for the price to react. So is your euro dollar trade a counter trend trade? Definitely, it's a counter trend. We see here on the H1 chart, this is a clear uptrend. H4 chart, this is a clear uptrend. Of course, I will not buy here because we are at the top of the trend. And as I explained in my mindset, I'm all the time waiting for the price to get back to the average. So that's why I have Bollinger Bands. It gives me all the time the indication where to exit, but also when to not enter. Okay, I will also give you for people that are new in the trading room, this is my analysis. This is only my mindset. It's maybe sometimes difficult to implement it because most of my trades will be against the trend. Okay, so it's of course it's required a strong risk management because at some point you can get crushed by the market at any time. But if you look at the dollar yen, here it's also an explanation. And I was looking at that for a long period of time, and I was telling, and you can also look at in all of my trading room, I'm not looking to buy the dollar yen here or here or here. Okay, if I want to buy, I will only buy when the market is giving us a strong bounce. For example, here it might be a buy, but here it will not be a buy for me because we are approximately at the average. Okay, so I want all the time the better price to get in, and to expect a retracement. So here, I don't know if I was selling here. I was not selling here, but here it was a point for me where I could not buy the dollar yen because we are actually at the top of the trend. The market is already overextended in a weekly chart. If we go to the monthly chart, we are also on a resistance. So it's quite difficult to know when to sell, but it definitely gives me the indication why I should not buy here and why I should not buy here. That's it. If we can go back maybe to gold, and I think this explanation is also a nice one. Okay, I will go for the H1 chart. Okay, so also on the gold, this is a clear uptrend, but I will not make a buy here. Okay, definitely not, because we are around the average, and not what I explained is that we have around the 50% chance for the price to go up and for the price to go down. What I'm explaining here is, you know, a bit a quantitative explanation. I know that some, you know, institutional traders are using it, but they use it using a system. They have the average price at each moment of time. So it's quite a method of quantitative trading and institutional trading. What I'm explaining to you, it's not technical analysis. Okay, I'm not. Of course, I'm using technical analysis to open my trades, but this is not my main, let's say, mindset to use only technical analysis. I don't have actually the system where it can give me where the price is far from the average, but I'm using this quite a lot of time, and I'm using also Bollinger Bands to get that. I was trading options before, so I know, let's say, the volatility of an asset at each moment of time. At some point, we can understand that there is let's say, an extended volatility action, and then the price will go back. This is what I look for in the euro dollar. Just here, let me explain to you. Okay, so here it's a huge volatility movement. For me, this was not so much explained. We are especially in the zone, so it gives me a good price to go in, and here was for me an opportunity to get in the market. So yeah, we will see here. We are actually in a demand in the M1 chart. Here the market can give some bounce. Still checking if I could exceed 25% of my position. I think it will not be bad if I exceed 25% of my position here. That's what I'm doing. I'm just exceeding 25% of my position. I think the next 25% will probably be around that zone, and the last part will be around that zone here. Do you use Fibonacci for counter trend trades? I'm not using Fibonacci again on automatic process. I can sometimes use it to give, you know, some confirmation in my analysis, but this is not the tools I'm using every day or every time I take a trade. But sometimes I use it here. Yeah, and we see here clearly that you see the market have reacted to the demand on the M5. This is a clear demand, okay? Supply and demand. I think Gil have made an awesome course on our YouTube channel. Demand and supply trading here on the M5. This is a demand. Here the market can bounce a bit. So that's why I'm taking 25% of my trade out. Okay, let's find if I can put the camera back again. I think it was overheated. There we are. Okay. No, I don't know what is written actually. Exhausted. Okay, battery exhausted. Oh, okay. So I know what I should do. Hold on, guys. Maybe you're gonna see my face again. Yeah, okay, here we are. Sorry guys for the small technical issue. I think I'm good. I could be a tech agent probably. Okay. There was only no battery, so it was kind of easy to resolve that. Okay, how do you catch those opportunities? I'm every day looking at the chart, so I'm every day trying to learn and trying to know what's happening in the overall global market. So I know most likely the big key zone and where the market can retrace or not. I don't have an alert. Okay, I'm myself looking at the chart and then saying, okay, here we can have some retracement. There might be here an opportunity. So I don't have any notification setup. I'm looking at the chart every day, and I'm checking every day where the market goes or not. And sometimes it can be interesting to make any trade. But I think, and I also explained that yesterday, that here there was nothing to do actually. You see, it was a big consolidation zone yesterday, and today when I wake up and I see, okay, London session starting to push. So here it was a support, let's say clearly support. We have a PPI that again pushed the market up, and I say, okay, we are in a daily zone. The market can give a reaction, and then I took my decision. But yeah, I don't have an automatic process that tell me where I should go in or not. But at some point, maybe if I learn some EA or algo that tell me, okay, here the market is overextended, it's far from the average, you can have a spot. Yeah, that can be something I can think for in the future. Actually, trading is not my full-time job. I'm here working at the 5ers, a bit managing the risk management of the overall pool. But yeah, if I don't know, maybe one day I go back to be full-time, that's maybe something I can work on, definitely. Okay, here the demand is a bit erased. We'll see if the market continue to go down. I hope so. But yeah, here the market is struggling to break below the supply, the daily support of the London level, of the London session. We're starting to break it on the downside. And here again, also you see on the M1, the market pushed at the opening again to my entry point. And then the market going to my way. Something very important, guys. That's also something I'm keeping. I keep telling into almost all of my trading room. There is a big, actually, in this period of time, a big correlation between the dollar and the US market, the US stock market. Let's say there is a macro correlation that we explain as risk on and risk off environment. I hope that you guys know about it. Because it's actually driving the market. Okay, it's definitely driving the market today. Risk on, risk off, all that things. This is actually what is driving the market, the overall market. Yeah, and here the S&P also continue to go down. I think I exit the market probably here. I didn't want to be overexposed because I already have a position in the Dow Jones. But that's fine. I think the market goes in the way we want, at least. Yeah, so here we break through, we break below this zone in the euro dollar. I hope this can continue. We just break the daily support in the euro dollar. We should wait for the candle to close, but I think we are on the way. We'll see if this is not only a reaction. Clearly, I need to watch you. I need to watch you more often. Thanks for teaching. I appreciate your words, Ryan. Definitely, you're welcome to come into our trading room here at the 5ers. I appreciate your words. Yeah, the market needs to give us a confirmation that the downtrend is starting. Here, the market is only consolidate. Here, we should actually right now. I only need to be patient. I think I have the good price. I'm in. I already have some good profit. But again, it's not enough, okay? It's not enough for the risk I was ready to take. Yeah, definitely the camera will turn off again. But anyway, guys, we almost reached the end of the session. So I appreciate this session. I think we got a nice spot. Nice opportunity that we found. Again, all the time, very happy to not. I will not say teaching because I'm not a teacher actually, but maybe a mentor of or a trader like you that bring an analysis, and this is my own analysis. So happy to give my mindset and to share with you my thoughts about the market. This is something I continuing to appreciate. And to like doing that. It's also learn me to sometimes we have some traders here that give some analysis and some they are also sharing their mindset. So again, very appreciate being with you with this type of session. Tomorrow it will be a trading room for the London session. So sorry for the American guys that will be sleeping, but tomorrow there will be a live trading room for the London session. It will be on a new channel called Trade Delicious. It will be with Jordan and Saul, so I invite you to be with us on the London session tomorrow. Again, in my side, I will be monitoring the trade I have, managing this. I will probably make a conclusion of how those trades ended next week. And yeah, guys, I wish you a nice day. I hope you like the way we trade and I trade. Definitely, my mindset is different, but I always like to share my thoughts. So guys, have a nice day. Thank you for being with me. Appreciate our time together. Bye bye, guys.